Assalamualaikum and a very good day to Madam Farani. Today my group and I would like to present the analysis of Aeon Corporation Malaysia BERHAD. So before that, I would like to introduce the group member. Firstly, myself, Nurliyana Batrisyia. We have AMIRAH, NORNABILA, FATIN, HAZIQAH and NABIHAH SAYYIDAH. So before we do the introductions, Aeon Corporation Malaysia BERHAD, which is formerly known as JASCO Corporation Limited. Aeon was incorporated in 5 December 1984, and after 38 years present in Malaysia, the company has officially changed and rebranded from JASCO to Aeon. So the tagline of the company is Aeon Enriching Your Lifestyle, which is related to the Aeon name, where it's taken from Latin means eternity. Its goal is to work together ceaselessly with its customers, business partners, suppliers, shareholders and the community to create a future of unlimited promise. Aeon target market are the middle-income resident family, as they provide quality merchandise at a very affordable prices and complemented by goods, food, services, entertainment for their customer. Aeon is generally involved in the operation of a chain of department store and supermarket which provide a wide range of products from clothing, household products, food and others. Their business model involves the operation of retailing business as an anchor department store cum supermarket and is completed by the shopping mall operation. Aeon currently operates a total of 34 stores and manage a total of 26 shopping malls in Malaysia. Aeon are diversely spread out to a few states in Malaysia, which is include in Kuala Lumpur, Selangor, Penang, Johor, Perak, Melaka, Negeri Sembilan, and lastly Sarawak.
Hi, I am NABIHAH SAYYIDAH, and for this part, it consists 4 types of ratio, which is current ratio, acid test ratio, deal to sell inventory, and average collection day. For the current ratio, Aeon Company BERHAD has a very low liquidity position. This indicates that the company may have problem meeting its short-term obligation. The current ratio was higher in 2016 at 0.39 times. This shows that the organization is ineffective at controlling its existing asset in order to meet the company's short-term obligation. Based on acid test ratio calculated from 2016 to 2020, show that the ratio is lower than the recommended acid ratio, which is at 1. Company with an acid test ratio that are lower than 1 indicate that the liquid asset is not enough to pay the current liability, and this should be treated as caution. The ratio show a downturn from 2016 to 2020 at 0.07 times and 0.11 times respectively. This is showing that Aeon Company BERHAD is getting worse. Inventory day to sell are the number of the company keep its inventory before selling it. Inventory sales there are higher in 2019 because Aeon Company BERHAD was able to shorten them. When comparing 2016 to 2020, it is clear that day to sell inventory is increased, which means that the company is not successful in maintaining its inventory cycle in order to generate revenue. For average collection day, from 2016 to 2020, it shows that the amount of average account receivable collection is less than 10 days, which means that the company collect the payment faster. This may have a downside because it means that the company credit terms are too strict.
Hi, I am NORNABILA and I will explain the effectiveness in managing asset and efficiency in handling operation. Firstly, cash turnover. From 2016 and 2017, we can see that it has risen from 27.21 to 51.52 times. After that, the ratio continues to grow to 60.87 times in 2019. It shows that the company has increased its efficiency by making effective use of its cash to increase its profit. Next, inventory turnover. In the years of 2016 until 2020, the inventory turnover ratio was 2.21 times to 1.81 times. As we can see that Aeon Co. and BERHAD has decreased its turnover over the years. This means that Aeon Co. and BERHAD on 2020 has been holding its inventory longer than in 2016. Besides, fixed asset turnover ratio is used as net of accumulated depreciation. A low FATO means that a company have not effectively used investment in fixed asset to generate sale. This is what happened on Aeon Co and BERHAD, where their FATO is getting decreased from 2016 to 2020 at 1.2 times to 0.74 times respectively. Last but not least, the asset turnover ratio calculates the ability of a company's asset to generate revenue or sales. In general, a higher ratio is preferred because it implies that the company is efficient in producing sales or income. We can see that the total asset turnover has been unstable, decreased from 0.93 times in 2017 to 0.96 times in 2018 to 0.64 times in 2020. This could imply that the company is inefficient and not effective in managing asset and handling operation has improved.
Last but not least, the next ratio that will be explained is profitable ratio, or we call it profitability overall and operating result. We will explain the return on asset, return on equity, gross profit margin, and net profit margin. So for Aeon Corporation Malaysia Berhad, the ROA, we can see that the company is at 2.15%, and for the year of 2017. The company increased its return on asset to 2.38%, but it started to continue to decline from 2018 at 2.32% to 0.66% in 2020. The percentage are very low, and out of 5 years, the highest for it is only 2.32%. And from this, we can infer that the company is inefficient in generating the net profit. And next, we have ROE. For the year of 2016, we can see that ROE is 4.85%, while the company is able to maximize it by 5.46% in 2017. After that, it decreases to 5.28% in 2018. It did rise up again in 2019 at 5.88%, but it dramatically falls at 2.46%. It clearly that the company will have hard time to produce that income for each shareholder. It relatively little compared to each shareholder. This might be due to the company may be mismanaged or could be reinvesting earning into unproductive assets. Furthermore, we have gross profit margin, which shows that 2016 at 32.43%, while it rose up to 23.16% in 2019. Out of the sale that the company received on 2020, gross profit was decreased to 30.71% of its sale from the year before. This shows that the company was not successful in producing the gross profit margin. And for the last ratio, it is net profit margin, went from the year 2016 to 2020, shows the net profit margin are only able to generate at only less than 3%. The company shows a downward percentage even though it did generate the profit, but it's very low. This shows that the company ability to generate revenue from its operation was low in 2020 at 1.02% compared to 2017 at 2.55%. While sales Aeon Corporation Malaysia decreased, cost of goods sold also decreased. But at the point that cost of goods sold amount not that different than the net profit amount.
Hi, I'm Fatin. I will continue with our cash flow analysis. As you can see in the table, there are 3 parts of analysis which are in terms of operating activities, investing activities, and also financing activities. I will start with our operating activities. From 2016 until 2017, Aeon shows a fluctuations in net cash flow amount to 97,333,000 of their operating activities. However, from 2017 until 2019, it rose gradually. This is to ensure that the business generates enough cash to cover the day-to-day running of the company, where the cash generated from operations should also be sufficient to cover the interest and tax payment. Next, there was a steep drop that occurred from 2019 to 2020. These fluctuations caused significant changes in the adjustments for the depreciations of property, plant and equipment, trade receivables, and as well as for the trade payables of the company.
Hi, I am AMIRAH BINTI ABDUL MUTALIB, and now I'll be explaining on the investing activities. The net cash flow from investing activities of Aeon from 2016 until the year 2020 fluctuated in the range of 44,589 up to 694,650. This fluctuation is majorly caused by the purchase of assets by the company. The main activities that are made in Aeon's investing activities are the purchase of fixed assets. Aeon made a purchase of 687,794 in the year 2016, which is the highest amount in all the years compared. The amount for the purchase of fixed assets decreased in the year 2017 at 368,668 and increased back higher in 2018 with the amount of 519,119. The lowest amount for the purchase of fixed asset is in the year 2020 with the amount of 45,630 only. The next investing activities that are mainly recognized by the company is the purchase of intangible assets. Although the value of the purchase of intangible assets is much lower than the purchase of fixed assets, Aeon still recognizes the investing activity of purchasing intangible assets. Aeon invested around 6,679, which is the highest in 2016, and 735, which is the lowest in 2020. We could see an average movement of the purchase of intangible assets from the year 2017 to the year 2019, with fewer fluctuations in the value. Next, financing activities. The net cash flow from financing activities shows a huge cash outflow from the year 2017 to 2020. It can also be seen that in 2016, the issuance of cash in the financing activities is positive. From the year 2017 to 2020, it is seen that Aeon has a negative cash flow. This can be due that the company has many things to pay, such as dividends, short-term and long-term debt issued. The main activity in Aeon's financing activities is seen in the issuance of debt in the company. From this activity, it can be seen that there is a great fluctuation from the year 2016 to 2020. This fluctuation is majorly caused by the issuance of short-term debt and long-term debt and the reduction of short-term and long-term debt. Aeon financing activities are also major in the payment of dividends. Aeon paid the lowest dividend in the year 2017 with the amount of 42,120 only. We could also see an average movement of payment of dividend of Aeon from the year 2018 to 2020 at the value of 561,600 with not so many fluctuations in the value. From this, Aeon is also showing that the economics of the company is stable.
As seen in the figure, the increment of net cash flow of Aeon decreases every single year. The decline in net cash flow has impact on the company's cash and cash equivalents and balance. The company had a positive net cash flow in 2018 and 2020, while the other 3 years had a negative net cash flow. In the year 2016, 17, and 19, Aeon appears to spend more money than it earns. The decline in the value of the company's net cash flow is related to the company's spending. As year passes, the company has improved its finance and investing activities, which bodes well for the company's future. This may be observed in the company's purchases of property, plant, and equipment, which enhance the value of their fixed assets and improve their operations. That's all from us. Thank you. To conclude, after we did all the analysis, we found that Aeon has its own strengths and weaknesses. As one of the companies that have a strong brand name in Malaysia, Aeon provides extensive training and learning programs to produce a highly skilled and motivated workforce. They also have built a strong culture among distributors and dealers, where dealers promote their products and at the same time train their sales teams to extract maximum benefits from the products. Plus, they're also relatively successful at executing new projects and generating good returns on the capital expenditure by building new revenue streams. In the meantime, since Aeon uses leverage rather than equity to generate its business, this might consider as one of its weaknesses. This is because financial leverage signifies how much debt a company has in relation to the amount of money its shareholder invested in. This is vital to the shareholder to indicate if a company would be able to repay all of its debt through the funds it's raised. However, this could be a sign that they need new investment in new technology where it results in reduced costs and improved profitability. Plus, referring to Aeon's return on asset indicates that the company has not used its asset efficiently to generate a profit. While for inventory, Aeon's inventory also decreasing in each year, which means that demand for the product is low or the stocks are sitting in the warehouse unsold for too long, which is costly for the business. Hence, this indicates that they have low retentions of customers. That's all from us. Thank you.